Hey everyone, Stock Estate here, and today let's go through some long investment ideas. And this company today we're talking about is in the financials industry, and this company intrigues me in certain points, right? When I read this article by this guy right here. Okay, and as a former financial advisor, okay, I'm just here, I just want you to educate the public a little bit more, expose you guys to a bit more investment ideas, those hidden gems that are not being talked about as much as those very hype companies, right? So if you are only, trading or investing in a certain sector, all right, that the mass media is all about, all right, you'll be missing a lot of hidden gems that is in the market. So it's always good to, have a more balanced view, okay, not always just play tech industry, right, okay, and play other different industries as well, all right? And without further ado, let's jump into reviewing and my reaction to this article itself, my own take after reading through everything, and I hope everyone here learned a thing or two, and I definitely learned a thing or two as well. So let's get on with the video. So this company, it is Jefferies. Okay, Jefferies. All right, Jefferies, they say, it is a growing investment bank with one of the lowest multiples in the company, right? So Jefferies performed extraordinarily in the first half of 2021. Definitely, if you look at this charts right there, it has gone up to 30+%, 40%, all right, since last year. Insane amount, I think up to 100% since October 2021. And the bank not only grew, but also increased its profitability, right? Interesting. All right. So right here, right, when I see it increase its profitability, I feel, there's going to be something. I like this company already because I want a company that's growing year over year, okay, at least more than 20%, right? That's a high growth company that I want to look at. Okay, that's ensuring that they're not taking too much debt, etc., but I don't want to bore you the details. I'm going to go later. Okay, despite these factors, Jefferies has one of the lowest multiples in the industry. Okay, when I heard this lowest multiples in the industry, right? Okay, some of the value investors are just jizzing their pants, right? Like, wow, so good, right? Okay, and I definitely like a low multiple, right? But definitely one thing I'm going to be cautious about is that cheap companies, right? Sometimes they're cheap for a reason, all right? So sometimes they have a low multiple because maybe their growth rates are shit, their growth rates are bad, okay? They're taking on too much debt, but definitely something problems around there, right? But again, if it's increasing its profitability, probably is a good thing. So investment thesis, right? Okay, Jefferies. Okay, market value has soared in the last 12 months, as I mentioned, up more than 100+%, right? But it's still largely undervalued, he says, right? So the Jefferies team showed excellent results in winning new business for the bank and will continue to do so, all right? The stock is undervalued even in the most pessimistic scenario. Okay, probably he has done some discounted cash flow models and he has definitely seen, in the worst case, right, the bad case scenario for this company is still going to do pretty well in the long term. Alright, so what is Jefferies about, right? Jefferies is a well-known US investment bank. It is holding a company, is Jefferies Group LLC, consisting of 80% of the revenue. Okay, we gotta zoom in on this, right? Because 80% of the revenue comes from this Jefferies Group. So again, this is going to be the main driving factors, right, for this company's growth and profitability. Examine its IB segment, investment banking segment, and capital markets, blah, blah, blah. Okay, all right, good. So position this industry, right? So again, want to look at and position it against its competitors, right? Is referred to a middle market bank set apart from Goldman Sachs, JP Morgan, Morgan Stanley, the very normal kind of stuff. And okay, however, it is gaining weight fast. Okay, in fact, if we look at league tables, we can see that, it is already ahead of a Swiss bank. That's pretty interesting, right? Swiss bank, UBS, is a pretty good company, right, that always does analyst ratings, right? If you're back holding a certain company, then you see UBS downgraded your company, right? Yeah, definitely you have seen this guy, the analyst, right, upgrading or downgrading, certain stocks, companies, etc. to doing analysis. So again, UBS is a pretty reputable analyst right there. So for them to go ahead of UBS, that's a pretty strong factor already. Okay, and the author actually gives some backup evidence for that, like Jefferies LLC, all right, definitely is going up, all right, and overtaking UBS already, all right, and on the way to go over to Barclays, Citi, BofA, Securities, Okay, so. But from 2018, right, you can see that they are going up in full year terms, right? They say it's already ahead of many middle market banks. Jefferies also growing more rapidly than all the other 10 banks, 102% growth in a 10-month period. So again, this shows that from a technical standpoint of view, technical analyst standpoint of view, this company definitely has a lot of buying pressure, right? Relative strength is increasing, right? A lot of people are actually looking at this company and thinking, hey, this is something to be looked at. This is a company that's up and coming. People are pouring their capital to back up what they're thinking. All right, so he suspects that the whole 2021, it could get even higher. Right, and there's a quote from the Q2 2022 report, and they said that the backlog of potential revenues from future transactions was at a record level. Right, that's pretty interesting. And surprisingly enough, right, the consensus didn't take this fact too seriously in forecasts. So apparently, right, the backlog of potential net revenues, right, for future transactions, there are a lot of backlogged money that's will be coming in future quarters, right? But again, the market once it releases result, they're like, it's not that bad, okay? But it means that this amount of money, right, would definitely represent a much higher rate of return and growth in the next couple of quarters, and the market is just not pricing in that as well. So again, this is the author's investment thesis. All right, he feels that this company, the market is not pricing in this move, and when the actual earnings come, okay, and they present the results flat in our faces, right, the investors' faces, right, hey, 300% year-over-year growth, right, and that's where we are like, oh my god, okay, I gotta price in that, okay, I gotta price in that, and I gotta buy into this company. So again, they are backing up this force by the revenue structure, right. They say the analyst is severely underestimating all of these numbers right here, okay, capital markets and their investment banking sector, right? I'm going to go into the details right here. I just want to give you the meat of the story, okay? If you want the exact numbers, right, okay, definitely I can link you to the article itself, okay, links probably in the description below, or you can go search up the 10K of the company and look it up yourself, all right, the actual numbers. But I know most of you here are not investment bankers, you're not here to do discounted cash flow models, so you just want to meet the story, that's what I'm going to give you. So Jefferies, right, has ended Q2 with very mind-blowing numbers, right, beating estimates by 19%, right, and you can see from figure 2, okay, the main reason behind the gain is IB's revenue, right, which is the investment banking revenue, which they are stepping into, which jumped 131% and accounted to more than the whole of 2019, okay, so they're up and coming high growth company, even though it's in the financial sector, which is more known to be a bit more stable sector that rallies along with the macro events, right, not really in individual companies. So yes, and he mentioned that the efforts of the IB team are very strong, okay. Every bank is enjoying pretty good growth, but Jefferies is outperforming every one of them in terms of growth. And I checked it as well. Yes, it is. They are improving overall, growth-wise, they are improving well. Okay, but again, you must take into account they are a smaller cap company. So definitely, right, the bigger cap company will have to do much more heavy lifting, right, to sustain their growth rates, right. So again, these are most of the time smaller growth companies that we can expect to have those runs, right? Massive runs. So again, Jefferies, definitely I have my eye on it because it presents a much more good maybe position trading or as well as investment, right? If you want to allocate some assets into the financials industry, okay, away from the usual tech. Okay, it's good to diversify. Okay, if you have a shorter time horizon, you are looking for more of a stable, right? Instead of high growth, high risk portfolio, you want a more lower risk, okay, a lower covariance between each assets. Okay, so so again, he talks about the revenue being 2 billion, 2.3 billion, all right, and again, in quite insanely high, all right, in Q3 2022 in terms of global IB revenue, right? So he says that he's not comfortable enough to forecast 2022 and further because of it being a very unpredictable environment, and I do agree with that. All right, so right now with all these disruptions going on, right, in investment, with all the digital space, Square, all these kind of companies coming up to disrupt the space, it's definitely gonna go through some headwinds, right? And at the same time, right, definitely big banks are trying to protect their own customers, and big hedge funds will find it very difficult to switch away from the normal investment banking. So I don't see this industry going away for the next decade or so. If it's going to get disrupted, it's probably going to be a few decades, right, before it slowly gets eroded. So again, you could probably position trade this for like maybe 4 or 5 years, right, and exit out this position for a decent amount of profits, right, from its massive growth run. All right, so yeah. And it goes on to talk about capital market segment, blah, blah, blah. But since the capital markets is a little bit smaller a segment, right, I'm not going to delve deep into it. But basically, this entire area over here, they're leading to a 14% gain, right? They're increasing their revenues as well in the capital markets, right? So, yeah, okay. So they talk about revenues and everything, monthly trading volumes increasing as well because They say that we are now at a period of market volumes reduction, right? They say that right now, since the entire market is slowing down a little bit more, hence that, investment banking, they would stand to, actually lose some of the revenue that they have, right? So they say they believe that Jefferies team will be able to perform better than the market, and have the fall period ahead, but just to stay conservative, he will put the market dynamics into his calculation. So again, he's forecasting that it will slow down and he's putting that in his calculation, which is good, because when we are forecasting for the future, right, of the company, you don't want to be too optimistic, right? When we're too optimistic, that's when, some things could not be, we could aim for the stars, right, but we fall flat on our faces, because we can forecast this company be $1,000 company, a $2,000 company, but okay, it's always better to be a little bit more conservative. So when it actually beats our own expectations, then wow, okay, then that's a good thing. All right. So yeah. So economies of scale in the bank, you talk about that. Okay, I don't think that's really important about this because I read it. It's okay. But after he forecasted expenses, okay, he said that, he calculated everything here. Okay, I actually want to delve in a little bit into this, but if you're interested in this, you can let me know. But I think I'll skip this because I don't want this video to be like 7 million years long. Okay, and yeah. Other segments itself, he kind of examine everything. Lumber prices are increasing. Alright, this segment is 20% of revenue in the first half of 2021 and will have a lower share. So he's kind of backing up with his valuation, right? So, okay, bring everything together, right? This is the most important part. Okay, so he said Jefferies' revenue grows 75% in the first half of 2021 compared to 2020. It also grew comparing to the second half of 2020 about 20%. So that's pretty interesting. And net income shows very strong growth numbers, mainly due to the lower base of 2020 and increasing profitability, right? So since 2020 was such a trash year, 2021 it seems very good in comparison. And when we see income statement dynamics like this, we also observe growth in market cap and multiples, right? So in the case of Jefferies, they say it didn't work out well enough. Shares have rose from 11.36, which is just the 3x really, right? Which is above the 2011 high. But in terms of multiples, the bank is still undervalued. PE of 6.5 to 7, which is lower only in spring of 2020 for obvious reasons. And price to sales ratio might seem a little bit high, but this multiple only rose from 0.8 to 1 this year. Okay, so for the banking industry, the price of sales normally is a little bit lower than all the tech industries and everything. So again, it's always important to value these companies based on its own sector, right? So 0.8 to 1 this year, overall comparisons valuation, it is pretty cheap. So value growth investors would be very interested, which I am. Okay, I like cheap companies, but also good quality companies. So even though the price of sales is high, but it only rose a little bit, okay, and as well as, its P ratios is very, very undervalued, okay, so that's pretty good. So it's a little bit confusing to use comparable valuation like this one, but no investment banking is the same. He tried to use a big mix of banks. Okay, this is where I'm very impressed by this guy because he really tries to look at the big picture, which I think a lot of us could learn from this kind of analysis, right? Not just focus on a few factors for long-term investment wise, right? We only focus on a few things, then after that, miss out on a few things which may crash the investment, blah, blah, blah. Okay, and yeah. So he said you shouldn't rely too heavily on comparison analysis in this industry. So he just compares everything. And yeah, he thinks that it's quite comprehensive. Jefferies is a longer outsider, it's a more of an outsider. But I do think that it's a cheaper stock by PE and price of sales as well. And he makes several assumptions that even if the market doesn't price in the future growth, right, its multiples definitely would not be found below LAZ or MC. So which is the comparables they are doing. Okay, now let's go on to the risks. So the valuation looks great, but in this industry, there's always underwater rocks. That means, bad stuff that could happen, right? So most of these risks are connected with the performance of segments and connected with the capital markets, right? Investment banking performance is pretty predictable, but the other segments are not. So again, although investment banking is a very strong amount of its revenue, okay, consisting of a very major part, but however, the other segments are pretty unpredictable. And his special concerns about the merchant banking, which will most probably be unprofitable in the year of 2021, which when it comes out in the earnings, it might drag down its earnings, right? So, Jefferies will also have to pay bonuses and fees in the capital market segment, and hence, will definitely drag down their balance sheet as well. So, yeah, he just hopes that doesn't ruin profitability or dilute his shares too much. So, in conclusion, right, so Jefferies is a middle market investment banking, right, which is fighting its place to get among the big banks. And like other banks, its performance is strongly connected to the macro factors, but it has some internal features to help it perform better than its peers and better than the market. And we went through it piece by piece, kind of, okay, and now we see that it's likely show the revenue at the end of year 2021 and will have very good profitability. And adding to its multiples, which are pretty cheap and one of its most value for money, you can see clear upsides that outweighs its downsides. So, thank you very much, author, for making this article. Okay, I enjoyed reading it, and I hope that you learn something from my commentary here. Okay, based on my own experience in trading companies, investing in companies. Alright, this is my take on it, and I do think that this company, I'll be interested, and I'll be keeping my eye on it, right, for any major dips, and definitely for its upcoming earnings call, right. So again, I would think I'll start a position. I might start a position after I listen to his earnings call because it's already so close to his year-end earnings, right. So there's no point playing an earnings gamble. So I'm just going to wait for earnings to come out, right? See what kind of results they get and see what the market reacts to. So if the market jumps up 50-60% after that, then it's way too overextended, then I probably will not. But that's why we want to look at multiple companies to find good companies at good prices for longer term investments. And with that said, alright, I hope you guys learned something about today, and I shall see you again, everyone, in the next video. Drop a like, drop a boop, comment in the sections below what you think about Jefferies, and for the current investment holders, right, of Jefferies, right? Okay, what are your forecasts and predictions for this company in the next couple of quarters, right? I would like to know from you as a holder or investor of Jefferies for maybe your own investment holding. So, with that said, I wish you all the best, invest safe, and I shall see you again in the next video, everyone. Stock stayed out.